Megan, so happy to have you here today. It's been such a pleasure doing all these fun things the last few months across the board, whether it's with Drive or events or different things. So it's been a pleasure. And I love what you're building with Franklin, but you've also touched so many other amazing projects in the space. You were the director of analytics and strategy at DriveWealth. You're at VeriLedger. You're at Omega One. You were in the early team of Serotonin as the VP of Finance, which is one of the preeminent agencies in the crypto space, for those who don't know. And now you're building a company as the CEO of Franklin, which is super interesting. I can't wait for you to share about that project today as well. So thank you for being part of this and such a builder in the ecosystem. And I'd love to kick it off by just getting a sense of like, where are you based right now? Where in the world are you? And what are you focused on right now?
Sure. Yeah. Thank you so much for having me. It's so fun to get to chat again among many conversations around all the different things going on in space. I am talking to you from Brooklyn. Shout out. I feel like it's the headquarters for Web3, honestly.
So. No, I miss Williamsburg every day, but that's amazing.
So what are we excited about? So many things going on just in this past week or week and a half, right? I feel like I saw you maybe 2 weeks ago in Denver and the world turned over a couple of times since then. So lots of things going on in the stablecoin environment around, well, certainly, so there was some SEC activity around BUSD and Paxos. Very interesting. This past weekend, USDC and DAI broke their peg. Shocking. We've experienced a number of different sort of issues in the traditional banking sector, with Silvergate going into voluntary liquidation, SVB blowing up pretty spectacularly on Friday. So we've spent the whole weekend kind of wondering what's going on. Signature Bank last night closed down by New York state regulators. So there's so much going on, and it's wild to keep tabs on all of it. And through this, you know, with what we're doing at Franklin, our goal is to really enable teams to be able to work together better. And we do this through Web3 native HR tools and being able to process payroll and process it more efficiently than others. And this sort of issue has been really highlighted by the activity of the past couple of days in the macroeconomic environment. So that's where we're at.
I can't wait to dive in with you on this because it is so timely, and given your background, right? Like, you've been working in the fintech space for a while, and Franklin, which is all about paying your team in whether it's cash or crypto, the concept of stable coins and DAI and USDC is super fundamental, as well as just critical, banking infrastructure. And so I would love to get, into the details of that together and share, what some of your thoughts are. It is a very fascinating time to be part of the industry. So obviously, amazing background that you have. I always love to ask this question of just what even got you started, because we all start somewhere. And it's just nice to share. So do you remember what your first ever investment was? And obviously, that can be like time, energy, money, both in the TradFi space and the crypto space.
Yeah. So I remember, probably like my first formal actually investing experience came because of one of my former bosses. So I was working for the CFO of a Wall Street firm, and he called me into his office kind of randomly, and I was like a little put off and nervous about it. But he had realized while reviewing the books that I hadn't signed up for a 401k program. And I told him it was because I looked at all the paperwork and I wasn't sure, like, do I do Roth? Do I do not Roth? Like, what makes better sense for me? And I couldn't figure it out and kind of put it on the back burner. And I will always remember him saying, you need to learn the time value of money. And because I was pretty young, I started working like pretty young. I got a job on Wall Street when I was 20. And he was like, you have the ability to actually like really take advantage of like the time that you have, and it's really important to sign up for these programs now. So that's something that stuck with me. I definitely talk about it to other people and things like that, the time value of money. But with regards to Web3, While I was working at this job, I was going to business school at night. I learned about Ethereum. Specifically, like my first interaction with crypto was Ethereum. I feel like a lot of people talk about Bitcoin and like buying weed or concert tickets or things like that. It was not my experience. I became very interested in it because I thought it was this amazing open source accounting tool. And so kind of dove in from there.
I love that. Yeah, your background is so interesting, right? Because you started in like a major like law firm, innovation space, and then, but obviously like accounting is such a core fundamental part of your background. What role do you feel you play now in the wealth space, and why do you think that's important?
When I was at DriveWealth, I worked a lot with our data team and also with our accounting team. And that experience was really transformative for me because you can really see how many wires in the financial system are disconnected and how manual so many of these processes are, and how much room for improvement there is. So I think that for myself, like the things that I'm really excited about building as now like a product builder is how do we bring these inefficiencies more to the surface to help make sure that people understand really like what's going on, like how does stock trading actually work, right? It's kind of wild when you pop the hood to see how things move. And I know this very well as well. But also, right, most recently in the industry of payroll, right, this is one of like the oldest B2B software industries out there. And it is rough. Like some of these payroll systems, it looks like you're going back to the early iteration of the internet, right? With these, very clunky, not intuitive UIs. And then when you look underneath what's below the UI, you can see why there's so much complexity and why it's so difficult to manage these systems and why large companies need like teams of people that only operate payroll, right? There's so much room to streamline a lot of these processes, and then also take a moment to reflect on like, how did we get here? How did we get to the place where it's now the norm where workers give their employers a 2-week interest-free loan on their labor, right? Are these sort of concepts, in addition to the technology, that we should be reevaluating ourselves as a society, as an economy? And the power of blockchains kind of gives us these tools to be able to ask those questions and then solve them, which is what I'm excited about.
I love this so much. It's so cool to see how somebody who can come from a traditional lens, right? You work in an accounting field or legal, and it starts to open your mind to like the applications of an old, like what a new system can do for an old system. And that's what we try to share a lot about, right? Because it feels like, oh, it's this new technology. How do I dive in? It's actually like, no, whatever your industry is, technology can be the way to like kind of advance it to the next stage. Can you just share a bit of like your journey of how you even got there? So you mentioned like you find Ethereum, it's this open source thing. Then how do you even go from this more traditional world into starting to understand the technology so then you can apply it to the point now where you're actually starting, a blockchain empowered and enabled payroll system and, in the future benefit system?
Definitely. So I think that there were a confluence of personal and professional factors that led to wanting to kind of take a pivot in my career and also personally. So I think, certainly understood an intellectual problem after years of experiencing it, right? And I think that is something that many of us, right, who have been in the workforce for a little bit share, right? And it takes, there's just like this next step to take that I think more people should take, which is how do we improve what we've currently got? And then, on the personal side, it was not fun being a young woman on Wall Street. It's a tough environment to grow up in career-wise. And, looking for something that sort of offered something else was kind of part of the appeal. And one of the things that's great about the Web3 community and the Ethereum community specifically is that, at least in my experience, in my perspective, there's a premium put on people's ideas. It's much less of a, did you go to an Ivy League college? who do you know kind of thing. And that was really attractive to me. I went to DevCon in Shanghai and was very excited by the community there, even though I really did not understand what the hell was going on from the technology side of things in the very beginning. And I think, one of these great organizations that has been, really focused on building community is ETH Global. And so ended up volunteering at a bunch of hackathons, which was super helpful for me to learn more about the technology and learn about it in a safe space where there are a lot of other people learning about it, as well as just develop friendships and network with people that really care about ideas and solving problems. So that's sort of what happened to get me into it. It was a slow burn of lead up to making a pretty big professional change.
Yeah, absolutely. It's so true that the focus on solutions is really, valued, and obviously was such a core tenet of your own value system. What do you think now that we're diving into this sort of macro environment, obviously bear market, but then to your point, like a lot of the core structures are falling, and there's some criticism of just like, everybody wants this new technology until they want to then be bailed out by like a centralized government. So I'm curious, what has been your perception of this new movement and both sides of the coin of decentralization and centralization in the role of everything from like how people get paid and what value they're using to exchange, and have that payment be executed?
Yeah. Well, one thing I would say is that the recent banking crises are not isolated to the Web3 industry. So it's a sort of larger problem around the tech industry in the United States. And that is, there are a lot of factors there that we can kind of point to that are all share some responsibility, but, perhaps overvalued companies that are now drawing down their reserves, right? Putting more pressure on bank balance sheets. Some what sounds like maybe not prudent risk management of those banks by purchasing bonds that they had to sell at steep losses. The interest rate risk of Fed continuing to increase rates at a pretty substantial clip. So, it's hard to point to all of these factors, right? Some of it also, which, we have to accept in the Web3 industry, is also just speculation, right? And so certainly panic over the weekend on the banking side led to Circle or USDC issued by Circle trading well below what we knew as a fact they were capitalized at. Right. So there's just some hysteria that you have to accept, I guess. And, it's not for the faint of heart, for sure, working in this industry or building in this industry, because you do have the responsibility of having to stay on top of these things that are maybe not core to your business. Right. So that's what I would say there. I don't know.
Yeah, it's interesting. I mean, I was sort of reflecting on this over the weekend and just thinking about like, even to your point about like the prudent risk management, like in a way, like buying T-bills, it wasn't like they were like, doing anything crazy, right? But I do understand like with the, the Fed and the inflation, that could have been perceived as more risky, but traditionally like putting cash reserves in a combination of, treasury bills is not a risky maneuver. So I'm curious if you could share a little bit more light on that.
Well, so yeah, I mean, this is fascinating, honestly, because we knew, right, and now it's easy to say in retrospect, right, but from disclosures of SVB's balance sheet months ago, that they wouldn't be able to fully liquidate in the event of a bank run, right, because of just the value of the bonds on their balance sheet. So that information was disclosed, but it didn't really manifest itself into a panic until they actually sold the bonds. So, it's an interesting thing because you're right, like buying US securities sounds good, but it changes over time, right? And it's sort of a factor of like the other things happening in the economy. So if you're buying bonds whose value is decreasing because interest rates are increasing, which we all know, right? There's that inverse relationship. Then it's, not such a great investment to make, even though, it's not speculative, right? You're not like buying crap with your bank's balance sheet, but it also doesn't make financial sense. And so one of the questions that I think comes up there is, this disclosure happened months ago. Why didn't the bank examiners force SVB to raise equity at that time? Like what happened with the bank examiners there, right? Because in retrospect now, and the information was there. So they're because of Dodd-Frank, right? They more closely monitor systemically important banks. So like the JP Morgans, the Chase, the Cities of the world. But when we think about what does systemic mean, the whole startup ecosystem could have taken like a 50% haircut, right? And that's very bad for the US economy. And so, do we think about like, are there more policy implications that'll come down the line for more of these regional bank or industry specific banking partners? Like perhaps, and I think for us as an industry, right, we need to be able to meet the bar and exceed the bar of like what at the very minimum, like what is required of TradFi to keep consumers and businesses safe. Like we also, as of the Web3 industry, need to be meeting that bar as well. So there's a lot that's going to play out in the next couple of weeks, months, and I'm excited to see it. I have my popcorn ready to, right, like for many of us who are managing companies like yourself, right, kind of like constantly being at the controls, like making these like micro adjustments depending on what's going on. It's going to be more important now than ever for founders.
Yeah, absolutely. And I mean, working in a business of payroll, especially where crypto can be used as payroll, and maybe like you could share too with the group, like how Franklin works and which cryptocurrencies can be used for payment. How are you guys thinking about your own customers and yourself now knowing sort of this new information around DAI and USDC and how the hysteria could have such an impact on those values and depegging them?
Yeah, for sure. So what I would say to that is a couple of things. So one is most employers and employees have kind of like a one-trick pony option for payroll. It's not flexible. What we aim to do with Franklin is to view compensation a little bit more like a spectrum, where you can have more optionality in how you pay your team or how you choose to get paid. And so that's helpful for a number of reasons. When we have these big macro events, maybe you prefer to take crypto, maybe you prefer to take cash, right? And then you can just slide that scale on the spectrum. That's not something that other payroll services allow you to do right now. On the cash side, one thing that I just wanted to emphasize is like we saw some payroll providers not be able to process payroll for their customers, like rippling. And that's pretty egregious in my view. That shows that you have not diversified well your sort of like financial stack. And that had a real impact on people. People who needed to get their paycheck on Friday did not get it because of one bank failure. And one of the things that we've been intentional about from the start is we work with a variety of banking partners that all use sweep networks so that we have exposure to different banks and wouldn't really, unless every single bank in the United States blows up, right? Like we'll still be able to process payroll in cash. On the crypto side, right, we can process payroll in many different currencies. We focus a lot on ERC20 assets. What we do is there's sort of like a matrix of things that we consider for each one of our customers. So if you're in the US, there are different state-specific rules on how you legally are allowed to pay your team. We'll look at all of that. We'll make sure that you're operating in a system that meets those requirements and keeps you compliant. To the extent that there's an asset that you want to pay your team in, if it's your own team token, if it's some other kind of token like ETH or Bitcoin, the process that we take is we'll do a whitelist check to make sure that it meets the requirements that we think make sense based off of like US regulations and all that good stuff. We'll whitelist the token through our UI, and then it's up to you to pay your team that way. And then we handle all the sort of like required reporting on the tax side for it.
I love that. And also the flexibility of making that choice during moments like this of whether you want to be paid in cash or stable coin or another token. that really does answer the question of, giving your employees like agency and autonomy on deciding like where they feel most confident and comfortable in their compensation. And one of the things you brought up recently, which I really loved, was, one thing that you had learned or sort of observed in the industry is this idea of like, taking, giving a sort of a 2-week interest-free loan to your employer when you're, waiting for payroll. What are some of the other sort of exciting or like crazy things you've noticed or learned during this process that you would want others to know?
Yeah, I think one of the things that I think about is a little bit less financial and is a little bit more like HR related, which is especially now in the sort of like post-pandemic world, the expectations and norms for how to construct a team and how to scale a team are much different because we're much more accepting now as a workforce around remote work. Remote work can add a lot of complexity to your back office stack. So if you want to be employing people in different jurisdictions or what have you, right? Company builders should be building the best company, the best teams, right? Irrespective of where they are and whatever, right? You want to assemble the best skill sets that makes sense for your business. And so there's a lot more optionality that we have now, building, in the post-pandemic world, which is exciting. And the question that we have, or that we're trying to answer with our product, is how do you build your company in a way that doesn't increase a ton of operational overhead? And what are the tools that we should be shipping for founders of global teams to make that process easier? And so that's sort of part of our ethos in product building, is like, how do we allow builders to keep building without getting, tripped up in all this sort of tax nuance?
And what are your sources of inspiration in that process when you're deciding what products to build, which features? Are there certain people or companies right now in the space that are really inspiring you, and how do you find them?
Yeah, well, I think that one of the important things for us as product builders is to be really closely in touch with our customers. And so our product roadmap is pretty much a function of, hey, I want this thing, like, where is it? And so, we'll say, okay, give us a week or a month, and we'll ship it for you. And, we're lucky to have really fantastic customers that are willing to help design the product that they really want to be using. And that's really beneficial for us as a company. So I think just being really close in touch with your customers. And then, building in the payroll space, I think that there are some things that are just expected of payroll companies that we have to be able to offer to be competitive. So, and they're not all like Web3-esque, right? It's Web3, a lot of Web3 teams, and I was shocked as we went to market and started pitching pitching customers, is a lot of them are using Web2 tools, like Gusto as an example. And they are banging their heads against the wall because they want to pay in crypto, or they have some nuances that don't allow them to use this tool for their whole stack. And, we should be able to offer Web3 alternatives, but we also have to have all the upside benefits of TradFi. So we have to be able to offer health benefits for employers in the US. This is how our health system works in this country. It's all employer-based for the most part. So that's something that startup founders have to have access to. And we need to be able to make these bridges to the Web2 world from a Web3 product. So, that's kind of how it goes. I guess a combination of like making sure that we're in touch with customer demand, as well as meeting the bar that we know exists out there for other companies like us in TradFi.
And so what advice would you give to a founder getting started, right? They're setting up their operations. They're trying to figure out all these systems. They know there's TradFi options, there's DeFi, or Web3 options like Opolis or Franklin. What advice do you give to somebody just trying to navigate how to set up on the right foot?
Yeah, well, I think that's something that I learned that I wish I had learned earlier, honestly, is like people are pretty open to like cold messages. So if you have a question about somebody's product, like send them a Twitter message, like don't try and like spend a zillion years in their FAQs trying to conceptualize how to make it work. Like just reach out. Most people will respond, right? If anybody DMs our Franklin Twitter, like I'm responding directly, I'm there to help. one thing that's been helpful for me as a founder has been to have some relationships with people who have built companies that are further along than me. Because I think that you're so sort of like focused on the day to day of like, what do you need to get done now, right? What is going on in your current fundraising round, perhaps? What does this customer need? It's easy to lose track of like, what is the longer term goal and how do you think about scaling to get there? And so for me, having relationships with companies that are Series B, C, D with those founders is actually extremely helpful because it helps me to get in the mental mindset of like, what do I need to do to make this company successful? And so that I think is kind of instrumental, I would say.
Such good advice. How have you met those founders in the past? What have been good sources of making those connections?
So I have found at least that like one or two relationships open up many. And so, I think also like as a young woman in this industry, having a mentor, who my mentor is Sadie Rainey. She runs a company called Strix Leviathan. She's fantastic, has been super helpful in helping me open up some of these kind of doors. And so, if you don't have a mentor, there are lots of people out there that want to help young founders, right? In an equity-free manner, right? Where you're not having as much of a transactional relationship. So I think that's important. And then, what I would say is like, certainly if you're building a company, right? Networking is part of the game and being out there hustling, right? And following up and, there's, things don't always fall into your lap, right? It takes work, it takes time. And so there are all these amazing communities out there to participate in, one of which, you have built yourself with the eVealth community. There are gems inside all of these places and it's all about finding them.
I love that so much because it can seem intimidating, especially if maybe you're a new founder, but it really is as simple as just starting to have conversations and being very giving of your time, energy, and insight, because it does, like, what goes around does come around. And I mean, even as simple as us, I think I can't even remember where we met. Like, was it through like the Komorebi community? I don't even know. Do you remember?
I think it was because of Serotonin, actually.
Oh yeah. Oh my gosh.
I don't know. Yeah.
That's exactly what it was. It was through Serotonin, and like that's, and I think that happened really organic. Like, it's just organic. It's like you're in those spaces. To your point, you went to DevCon, you met people, and then it just grows. And I love this concept of like community compounds. And then all of a sudden, you're having these discussions, and you also put us in touch with Sadie Rainey, who ultimately became, a great advisor of ours. And so I just love that advice, that it really is as simple as just sort of being out in the world and like being giving of your time and your insight. And it does kind of come back in really special ways.
Yeah. I love that term too, that community compounds, because that's exactly what I was talking about at the beginning of this call with like your money compounds too. So like the time value of money and then also the time value of relationships, right, are things to think about. There are a lot of similarities there.
There really are. Well, this has been such an amazing interview, as expected, but it's always so nice. We could go on forever. How can we keep in touch with you personally as a founder and builder in the space and the ecosystem, but also Franklin as you build and evolve and grow? Yeah,
sure. So I am all over the place. I'm on LinkedIn. My email is megan@hellofranklin.co. I'm on Twitter @notmegan. So any of these places, hit me up. I would love to chat and start capitalizing off of the time value of community and relationships.
I love it. Thanks so much, Megan. We'll definitely be following along. And as always, it's such a pleasure.
Same here.